Coming up on this episode of the Stock Market Playbook, we have Vuk Vukovic, who has taken the idea of a prediction market and gone internal with it for his own hedge fund. It's a wild take. There's some interesting things that he's doing, and talks about how we take the groupthink and turn it into something that is dollar bills. So enjoy this podcast, enjoy this episode. It was a super interesting one. A lot of things that I have never heard or thought about before. Enjoy. Okay, welcome back to the Stock Market Playbook. I'm your host, Jared Johnson. We are lucky enough to have Vuk the Wolf Vukovich. And Vuk, very happy to have you with us. As we were just chatting before we hit the record button, Vuk means wolf. Vukovich means son of wolf. I mean,
yes.
I have never had nor ever will have somebody with a more amazing name than what you have. So
Thank you so much, Jared. Appreciate it. Appreciate the invite, and yeah, great introduction. Love it.
Excellent. Well, we're excited to have you on. I think we have some great things that we need to cover. Now, this is the first time I'm meeting you, and I'm looking through your website. I'm looking through all of your details, right, and trying to get a feel for who is Vuk and what does Vuk do and look at. I see. We'll get into all of it. I see you wrote a book recently, but give our viewers and give us kind of a little bit of a background of what you do and what your take on everything is.
Sure. So I come from an academic background. So I was an academic before doing this. So it was like, and then we developed, myself and my two partners, we developed this new methodology that we first used to predict elections, and then we use it to eventually predict markets and do what we're doing now. So I went from academic to entrepreneur to fund managers, all the way down. I'm kidding, obviously. Yeah,
that's a big. Those are big steps because typically the academics stay in academia so much.
Yes.
They don't venture into the fund management world. So that's a big step. Good for you.
So the thing is, like, so we again, so I did my PhD at Oxford. That's where the book it comes from. We can come back to that. But basically, while I was there, you sort of kind of become a little bit disillusioned with the academia in the sense of what you can do and some of the things. I mean, don't get me wrong, I like doing that. It's just that you still need to kind of jump through the same hoops that you would in like a corporate world setting, which is not something that I like. Much more I prefer the freedom. That's why I wanted to be an academic in the first place, for like the freedom to do what I want to do. But then I realized that entrepreneurship gives me a much better idea of doing that rather than just academia, right? And the thing that kind of pushed me into it was this methodology that my two partners and I developed, right? My two, so we were all scientists, right? One is a computer scientist, one is a physicist, and I'm an economist. And we were writing this methodology. We wanted to devise this new methodology of predicting elections, so doing better than polls, like improving polling. That was the whole idea. We will use like the combination of wisdom of crowds and network analysis, because all three of us did kind of things with network analysis, to be better than kind of predicting outcomes than regular polls. Polls are not predicting outcomes, obviously, right? Polls are snapshots of attitudes over time, but They do have this element, right? When you look at them, and that's what people expect. And so we wanted to do it a bit differently, and then we tested this on Brexit and Trump in 2016, and it worked really, really well, right? I mean, when I say really well, like incredibly accurate prediction, like within a single percentage point margin of error, for like both the Brexit outcome and all the key swing states in the U.S. elections for Trump at the time. And then we started a market research company, right, where we did mostly elections and market research. And that was kind of my venture into entrepreneurship. I was still at Oxford at the time, still doing my PhD. But then I finished that, and it was entrepreneurship full on. And then after the Biden election, another election that we really got accurate in all the swing states, again, Florida and Ohio for Trump, all the northern states for Biden. We decided to, all right, let's try to see if this works on markets. We had paid plans by the time. We were, we had a company right now, and so we decided to see if it works for markets. So I took $20,000 of my own money, traded for almost a little bit less, like a year and a half, let's say a year and a half, and brought those 20,000 to over 50,000. And I did it very transparently on my newsletter or my Substack newsletter. People were following us. They liked the idea. And eventually, they said, let's give you guys money and start a fund. So we started the fund with only $700,000 in February 23, which is nothing, right? AUM. So it was like our own money, a couple of friends and family, and people that
Sure.
were observing us in the newsletter, and we brought that to 70 million in 2.5 years. So we're very happy with how it went. We're still a small fund, obviously, but that's recently because of that I made the move to New York City. Now I live here, my wife and my 3 kids, and looking to scale the fund immensely next
And
year.
here you are. Well, and listen, a $70 million fund, especially after a couple of years, especially after not having a bunch of hedge funds backing you, that's amazing. That's
Thank,
that's fantastic. So
thank you.
congratulations. That's
All bootstrap, all our own money pushing into the company and then pushing it up this level. So yeah, it's been a it's been a wild ride, I have to say. I love that's what I love about entrepreneurship and being a founder. Right? It's always exciting.
it's always exciting. It's
Yeah,
sometimes you're not. You don't have to worry about like sleeping at night and some of
yeah.
those
Yeah,
some of
yeah,
those
that's
details.
thing. Okay.
But it's exciting and
I
the
don't, to
payoff's
be honest,
great.
I don't have the problem with sleeping. I have a problem living with myself when I'm not sleeping. That's the that's where the real issues.
Understood. I
Yeah.
agree 100%. That's super exciting. So let's take it back a couple of steps because I feel like there was a lot of interesting points in there. But you got a PhD from Oxford, and you were planning on what? Did you want to be a professor? Did you want to teach economics?
Yeah, so that before I came to the PG, that was my goal, right? So I was teaching before in Zagreb back home. I was teaching so this was I did my master's at LSE in London. Then I went back home and I was teaching a bit, and then I went to Oxford because I had the academic career. I was publishing papers, teaching as well, and Oxford was supposed to be the final step of that type of career. But then we developed this thing, and so the whole thing started as an academic paper, basically. So the three of us wanted to write an academic paper of this better methodology of like predicting things, elections in particular. But once we saw that it was so good, we decided to monetize it instead of writing it as a paper. And that kind of pushed me into that side. All right, forget about writing papers for now. Let's see if we can make money off of these things.
Oh, that's great. I have a good friend that's a professor of finance, I believe, at one of the local universities here, and so we always sit and talk, because I manage a fund as well, and he always says, "I will tell you in theory how markets should work, and then you tell me how they actually do
It
work." And I
actually
said,
worked
"That's
exactly.
a great conversation to have,"
Exactly.
but it made me think of it because he always is talking about research papers he's writing, and he said, he has said multiple times, we're putting in so much time and research into this for the 8 people that will read it. And and so I think that's so awesome that you
Three,
guys
three
said,
of which
look,
are reviewers, by the way. Three of which are reviewers of a journal, and then
right, that are paid to read the paper.
read the paper. Yeah.
So I think that's great. I think so many good ideas come out of that stuff, and it gets lost in the in the endless research that's out there. So that's super cool. Now, obviously, this is a crazy hot topic that you bring up. So you and your partners started looking at predicting elections and doing some of this stuff, which of course any kind of predicting anything has been what we've all been trying to do forever. But now here we are in 2025 and certainly 2024 and kind of earlier on the last few years this prediction market situation has really exploded. It's really blown up, and it sounds like you were a little bit ahead of the curve on that. If you guys were doing this stuff 2016, now there were
Yeah.
prediction markets then, but they certainly
Yes.
were very, very limited to what we have the last year or two.
Well, absolutely, and the volume has exploded there, and that's a good thing, right? Because a lot of people are kind of doing this because our approach is essentially it's the same logic, right? So we're trying to utilize the wisdom of a crowd's approach, where so our questions the way we ask them are a bit differently. So what you have with prediction markets is like what the outcome is going to be. So that's the predictive element, right? But for us, we add a second question here is the question of what do you think other people around you think is going to happen? Because that second question, it kind of nudges you to start thinking about what, like, start putting yourselves in other people's shoes. So that's like the neighbor method sort of thing. You had that approach, and there was a article in the Wall Street Journal that was a French trader that did this on Polo market. This year, he
Hmm.
was asking people, "What do you think others would do?" That was our approach, right? When we did it the first time when we did this, because like I'll give you an example. Back in 2016 specifically, a lot of people didn't. You had a shy Trump voter, for example. They didn't want to say they were voting for Trump. But then if you ask them like, what do you think everyone around you is doing, and they say they are voting for Trump, or even if you're not, right? You're basically by asking people what are others doing, you get a much higher predictability element, right? So you can have one political view, but then if you're surrounded, but people that are like they're doing something else, you have a good idea of what that is. So that's kind of the kind of the point of the approach of how we approach that, and that's all rooted in like psychology and psychological research. So that specific thing is like pure Kahneman-Tversky models. So you're trying to force people from system one to system two thinking, which is like automatic but a little bit more deliberate. So we saw this because we did these experiments, right? We did the A/B testing, and we're looking at we gave it to students, right? But it was trying to figure out and when you give them the second question, the meta question, where you're trying to ask them to put themselves in other people's shoes, they literally spend like 30, 45, 60 seconds more on a question, and this improves your predictability because then you go to the previous question and you start thinking about that. All right, maybe I was a little bit too, too much or too less or whatever. But the thing is, so that's the first element. And the second element is really and where our approach really comes to fruition is the networks analysis element, because we're seeing these people in their social media bubbles, and
Hmm.
most of us are obviously in echo chambers and bubbles, right? But then, and most of people are going to be, let's say, bad or less good at making predictions if they're in a cognitive echo chamber, which again makes sense, right? Because if you're like, let's take politics again. Like if you're only surrounded by left-wing people or only by right-wing people, you're going to have a certain worldview, and you're not probably going to understand the other side, which is, again, most people are in these types of environments. What we're looking for, and what we did look for, is people in between these groups, right? So some of your friends are left, some of them are right, some of them are center. So you have a much higher probability of being right. Doesn't necessarily mean that you are right, but you have a higher probability. That's the whole idea. And the same logic can be applied to markets, right? Because with politics, you have divisions, right? It's a very divisive issue, left versus right. With markets, and bulls versus bears, right? And then you have, we often tap into like a bubble of echo chamber of perma bears, where every week the market is crashing, right? They will be correct once, but most of the times they'll be wrong. Same thing like I'm permeable. I had a lot of so we did crypto predictions at one point, but all I could get into like Bitcoin maximalists. So every person in there was like Bitcoin is going to 100,000, and like that was it. Okay, fair enough. Not really useful in terms of there's no variation there. But yeah, so you're trying to get people that are exposed to different types of views, bullish versus bearish, and then that gives you the signal that helps us trade markets.
That is super interesting because certainly in the stock market, right? Everybody loves to, and I think it's kind of gone away from this a little bit over the last, very recently, the last couple of years. But remember, the retail investor was always the dumb money, right?
Right.
The people that were last in at the top
Yeah.
and first to get out at the bottom and doing all the wrong things and everything. And how ironic that
Right.
based on their behaviors, so much accuracy and predictability can be extracted.
Exactly. Exactly.
It's
And we
it's
and we
it's
yeah,
super interesting.
absolutely, and especially like this year. I mean, in the last few years, ever since like the zero day to expire options have been introduced, so we trade on the options market, right? So we see this, and these retail flows have been incredible. Retail investors pushing the market. So this year, hedge funds have been, trailing behind retail investors. That's a fact, right? You can see that in the data. And that's very interesting for us in the sense of like, how you want to position yourself. You want to position yourself in order to figure out what these guys are doing. And yeah, so investors come to us for that.
That is very, very wild. Now, speaking of, so you guys take all this information and kind of run it through your scenarios
Yeah.
and start to build ideas on
Yes.
either whether it's a political outcome, and you do this with individual stocks. Or are you guys doing this with an index? What? What's that?
Index level. So we're no longer doing political outcomes. So ever since we started the fund, the whole election prediction stuff has been that's it. We no longer do it. So we had a UK company that we did it for the UK company. Now we have a US GP, general partner, and that runs the fund. So we're no longer doing anything with elections and politics, but we are kind of looking at, we're asking these predictions on the stock market indices. We used to do single name stocks as well, but the edge was not as good as index level predictions. So when I say index level, S&P 500, obviously, and we buy options on the S&P 500 index, SPY specifically, the SPY ETF. And we are kind of now expanding to Max 7 options for the single name stocks. We used to, we still do like the VIX predictions and the NASDAQ and the Dow, but these are like correlated anyway, especially the Dow and the NASDAQ to the S&P. We also have the 10-year in there. So these are the kind of things that we're still kind of predicting for our survey competitions. This is how we get our signals every week with our regular participants. And from that, we source the signal and we trade it.
That is very interesting. Now, so on your option trades, once you have arrived at a decision point, what type of options are you guys? Are you long options, short options? Are you spreads? Just what's the go-to? Zero DTE? Where do you guys kind of find yourselves?
Sure. So it's always long options. So we're always long vol. We don't sell options. So we're always on the buyers of options because we want to have that, we want to be exposed to the upside. So the way that this works, so we will be buy typically on any given week, 2-day to expire or 0-day to expire options. In the week that we're trading today, because we get to do our surveys on Tuesdays, we run the trade on Wednesday, and then on Friday we close, right? A trade. So we always get out before the end of the day. So there's no exercise of options, but so we will always buy. And then if we're in the money, we have a strategy, like a trading stop strategy, to make sure that you get out in time. If we're out, and we always would buy out of the money options, like 1 or 2 strikes out the money options. And if we remain out of money, then you let it expire. So we're kind of introducing some trade stops on that side as well. But typically, you would let it expire with us because we're only risking a very limited amount. So we're only risking 2% of our portfolio to buy the option premium. So that way, you're exposing yourself. So a lot of times, you're going to have either some small loss or some small gain. So either your market is going grinding up in your direction, or it goes the opposite way of your prediction, and fine, you lose a little bit or you gain a little bit. But then 5 or 6 times a year, because of this optionality, and because we're buyers of all, both the upside and the downside, we make 6-7%, 5-6-7% type of weeks. These are our super weeks, and they basically make your entire year, right? So our performance, since inception, has been about 80%. Most of that came in a couple of really, really good weeks per year.
That is the essence of the stock market, though.
Totally.
It's five trading days tend to make up the majority of the gains of any given year, right? And
yeah.
This is why I don't go on cruise ships very often, because I think, of course, the week I go, I'm going to miss everything. And so
I know what you mean.
That's super interesting. Now, when you what is your guys's? Because right now everybody will log into Polymarket or Kalshi or one of those, right? And they'll say, what are the odds, right? How much money is being bet on a yes and how much money is being bet on a no? And they'll look at their odds and they kind of move on from there. Now, you guys are kind of conducting your own research, and you're pulling. You have an algorithm that works with social media, and are you guys putting out questions as well, or are you just kind of analyzing the existing data?
No. So we don't analyze the existing data. We invite people to come to our own survey, right? So we have our own platform, a survey platform, like a website, basically, right? People come in and they do the survey, and it's a very quick. It's like a 5-minute thing because you have 3 questions per asset class, 5 asset classes, so not a lot of questions. People go through it, and the way we encourage them is we giving cash prizes, right? Specifically, but not based on luck, it's based on skills, right? So the top 30 people get rewarded $8,000 every quarter. So like the first guy gets 1,400, the second guy gets 1,000, and so on and so forth. And then at the end of the year, 3% of the GP's profits also get distributed to the top 40 participants. So that way we want to encourage people to keep playing. And to be there for the whole year, we have about 3,500 participants, and then from then we basically, they're in certain, not everyone's active. Obviously the attrition rate is high, and people they don't stay in very often. They don't keep the attention span as low. But even with a low number of people, a couple hundred, we can get a really, really good prediction.
Wow. What a world we live in. That's amazing. So, okay,
Thank
so you guys are getting these short-term outlooks.
you.
Do you do anything in the longer term? I mean, do you guys try to have any kind of outlook for what you think or see over the next year, or are you really focused on kind of these day-to-day type
So
situations?
great question. Thus far, we were only focused on the short term, only focused on like trading the weekly and the day and the 0 day options based on the weekly signal. But now we figured out that you can extend. So we have these predictions that happen all the time, right? Now what you can do is you can look at the weekly predictions. And you can get like a moving average of predictions, say, all right, the market is basically bullish, or things are turning, so it's becoming bearish, and this can give us a very decent long view. So right now, the quant team that we have is looking into this as well as a potential thing to kind of exploit the signal as well in another way, right? Because right now our portfolio structure has also been very simple. We did 2% for option premium, everything else is bonds and cash, right? So it's very simple because you have that kind of barbell strategy. One thing like 98% is super safe, 2% is kind of the thing we can swing up and down. But with this idea of what we're doing right now is we're looking that we can extend this even for the longer periods, right? Because before we used to do the reason why we didn't do longer periods before, because we used to have surveys like, let's give us a month in advance or like 2 weeks in advance, and it didn't work. The edge was not there. It was like 50-50 or worse. The weekly ones worked as well, but now we can say, okay, the trend from the weekly ones actually can give you a good idea of like the overall trend over the next few months.
That is interesting because there's such a, I think, a divide between what people think they should be looking at and what they should actually be looking at. It's interesting because I kind of share this sentiment a bit of people always ask me, what's your long term outlook in the market, and I always say long term like a month, and everybody wants to know where's everything going to be in a year, and it's like,
Yeah,
well, why don't
well,
you try to predict the weather for
exactly.
next
Yeah, it's
December,
impossible.
right?
That, of course, exactly.
It's impossible. But then I think there's this erring on the side of if we go long enough, we will eventually be right. But
Yeah,
so there's this kind of line of if you're too early, it's the same as just being wrong. But if you sit through something for long enough, you'll eventually be right. And then of course, the opportunity cost involved in all that. And so I think that's a probably a lot more of an outlook that a lot of people are really wanting to lean towards, which is just the short term. Although the short term is tricky, right? 1 to 2 days, 3 days. There's a lot of things that should happen in that period that could outside circumstances could affect that for a couple of days.
absolutely. So for us, I agree 100%. Like in the long run, I can always say that keep your money in the market for 30 years, and yeah, you're gonna do okay. You're gonna do really well. Whatever happens, right? Take any 30-year period and just put the money in an ETF, and you're fine. You're good to go. But like what this is, as you know, like in the hedge fund space, you offer protection for certain events. So for us, it's all about capturing these short-term swings. Sometimes you capture them, sometimes you don't. When you capture them, really, then you make, with like short-dated options, you can make 5, 10, 15, 20x, depending on the size of the move. Obviously, you're not risking your hope, but you're risking a small part in order to capture these big moves because you don't want to be caught on the other side of that, or on the side of time decay. So we're options traders, so we basically care a lot about like time decay hurting us, and that does happen often. But the fact that you're there every week to capture the optionality that can give you a very high upside, that's the name of the game, basically.
Yep, you got to just show up every time and
Absolutely.
and get those big runs. That is excellent. Do you guys see branching out further? I mean, is there any crypto exposure? Is there any of that stuff? What are thoughts?
Sure. So not on crypto yet. I mean, there's been thoughts about that as well. But as I mentioned, like when we did this as a survey approach, we didn't really get any edge there, unfortunately, right? Because it was mostly Bitcoin bulls. So unfortunately, right? And the thing is, like, if you're gonna give me a bullish prediction every week, I might as well just keep buying it, right? So that's not a strategy. Uh, um, Fair enough, right? But we are kind of branching out. So the S&P things, the S&P options is something we're doing right now, but we are going to next seven options, and we are going to some VIX products as well. But this is something that we will kind of lay out for the fund for our investors over the next year. One other thing that we're currently doing for some of our institutional clients is that we're developing this like pure tail capture sort of story, where you can like typical tail hedging funds, you're predicting the downside, right? Because you're buying puts or whatever. You're buying big calls or something, right? There's different strategies that people do. I'm just trying to simplify, obviously, right? But what we have, because we have this signal that gives you opportunity to make money on panics, which we have been, by the way. Like some of our best weeks came, like Liberation Day was a great week, or last year when Powell had that very bearish FOMC when the markets fell down 3%, that we made 7% that week. That was fantastic. And so yeah, the protection on the downside is obviously there, but it's also on the upside when you get like short squeezes. That's what we love to write as well, because you're writing calls in that moment. So the tail capture fund, where most of the time, like 80% of the times, you're basically losing out at the time decay, and a couple of times you're really waiting for that move, which tends to happen, in the late hours of trading on a Friday, right? So you wait for that thing to kind of just skyrocket and take you there, and make double-digit weeks. So you make a couple of double-digit weeks a year, and then you're done. The rest of the time, you're just like losing premium or staying flat.
Yeah, yeah, that's great. That's super interesting. I think there's such a space for that. I mean, obviously, the name of the game in the hedge fund world is just make money, whatever it
Yeah,
is you're doing.
I'll tell you about it. Just make money. Yeah,
Yeah, that's it. But I think the short term outlook is an interesting one, especially now because, man, it is interesting with the prediction markets out there and how much information there is now. It's almost like an information overload, which
yeah,
hopefully AI is going to help us disseminate some of this information
true.
and put it to use. But there is so much information out there, and so being able to just say, I don't care about next week. I care about
hmm
this week,
hmm
right? And
hmm
that's kind of the ultimate short term trading. And I think what you guys are doing is very different from. I mean, I would not classify this in like a day trading strategy because day traders, there's no way you can look at information. You just are trying.
Yeah.
Hey, it looks like it's going up, so we're going to buy.
Yes,
you
exactly.
know,
It's momentum trading. Yeah, absolutely. Hmm
it's the momentum side of things for sure. And you guys have a very interesting approach to kind of create your own internal prediction market and then bet on that internally, which I love that. I think that's great. So, are there any plans? I mean, seeing how big the prediction market has become, is there any plans to go public with the prediction market again, or are you guys just going to keep this internal?
We're gonna keep that internal. I mean, the fund is open to like LPs all over, right? And we do have a rolling basis for investors, but we are not. No, we won't go public in terms of the content. That's what you're asking. So this is something. Yeah, it's a private fund essentially, private placement.
Keep it inside. That's the
Yeah,
way to do
yeah,
it.
I agree. I agree.
That's the name of the game. Very interesting. Well, I'm sure there will be plenty of interested people to find out more information about what you guys do and where to make it available. So we will, of course, include those in the notes for the show. But tell everybody where they can follow you and hear more about this and learn more about this.
Absolutely. So yeah. So we are. You can follow me on Twitter. The handle is Wolf Vukovic, Wolf_Vukovic. And our newsletter, what you mentioned, is so the company is called Oracle Capital, Orca for short, because like the first two letters of the name of the company. Oracle is a Latin word for prediction. A UK company used to be called Oracle. And so yeah, this is now an extension of that. So Oracle Capital. We have our Substack newsletter, which is called Oracle's Predictions. This is typically where we inform our regular readers of the survey, in which they then participate, and then we try to do like some market analysis sort of things. So yeah, typically you'll find me on LinkedIn, on Twitter, or on the Substack newsletter. And the company, I work on Capital, with our website, workoncapital.com.
Excellent, excellent. We'll include all of that in the notes so everybody can follow more and see more about what you're doing. But that is super cool. Thanks for
Thank you.
sharing with us today what you guys are doing. I think that it's so interesting to see what we can do with the technology we have available now,
I
and
agree.
and
I agree.
uh, and and the various ideas and approaches there are out there. So that's a super interesting one. So thank you for joining us. It was a pleasure getting to know you and chat a little bit about your approach in the markets. So
Absolutely.
thanks
Thank
for
you so much,
sharing.
Jared. Thank you so much for inviting me. It was a pleasure talking to you.
Yeah, thanks. That was great.